I'm interested to know, either of you, what you think about potential risks from, or opportunities from, limits to the natural inputs to all of this. I'm meaning oil, fish, agricultural fertility, things that might play out in the next decade or so. How might that affect this, if you have an opinion?
Rob, you want to take a run at that?
Wow. I mean, when you look at what's happening in the Middle East, for instance, I mean, it is absolutely a risk. And, you know, when you have, you could have a real disruption in prices in oil, that, you know, we've seen what that looks like in the past. And, you know, I think what you try and do to mitigate some of that risk is to, you know, with the product David was talking about, is a product that very much has the ability to be both long and short. And so you want to have assets that would be on the other side of that. If oil were to keep going up, they would be able to be long oil futures. The one that really I worry about, and you could see it in the presentation today, is higher interest rates. Because if you have higher interest rates, a lot of people have money in fixed income. That's going to be challenged in that environment. But higher interest rates are also bad ultimately for valuations of all assets. So it's very hard to diversify away from that. A trend-following fund can actually be short bonds, so you can actually play the other side of that. So it's really trying to find as many assets like that that are uncorrelated to other assets to try and mitigate some of the risk. But you know, if oil goes to $200 a barrel, you know, it's not a lot of places you can hide from that. That is going to be very disruptive for the global economy. You know, I'll throw one out there, and if any of, you know, the guys in my group hear this, they'll laugh because we sort of laugh about this. But we had an analyst come into our office, and so if you want to worry, you know, the volcano in Iceland that erupted. Apparently, there is another volcano in Iceland that usually erupts a number of months after that one, and if that one, the positioning of that would actually be a lot more disruptive. And we're not talking about disruptive to air travel. It's not going to be inconvenient for flying home from Europe. Disruptive from food production. It would actually, you know, wipe out the food crop in, I think, over a certain latitude globally. I mean, and so what would that do? Food prices go up more than you know, they have. I mean, that type of thing, if that were to hit, yeah, inflation's going to be a real problem, and it will be, you know, real stagflation.
You know, it's interesting, and I take your question to be to some degree related to the issue of scarcity, or whether or not a number of these areas are we're simply running out, and we're going to bump up into this population, sort of the end of limits kind of thing with. So recently, The Economist did a really good survey on food and food production, and they made a very interesting observation. We've had increasing efficiency in food production for decades and decades and decades, and yet we've made some interesting choices, and there's two stories I'll connect to that. The first is that we used to have no money, no food stuff allocated to biofuels. It went to 2% in 2002. 2% of all grains produced went into biofuels. Now it's 8%. It's a pretty interesting question as to whether or not there's any, you know, from a moral perspective, about whether or not we should be trying to create energy out of something that could actually feed somebody. You know, and the question would be, with that 8%, which is an awful lot of grain, we're talking millions and millions of tons of grains a year going into something that can push a car. And the irony of all of this is, in the U.S., for example, the U.S. has got enough natural gas to meet its needs for at least 2 centuries. And tomorrow they could make a conscious decision to require, as Boone Pickens wants them to do, to put their entire trucking and bus system on natural gas. And if they did that, not only would it be better for the environment, it would reduce their dependency on foreign oil by several million barrels a day, and the money would stay in the U.S. A number of issues would be resolved with one choice, but not the least of which would be the need to eliminate the whole biofuel thing, which exacerbates the food thing. The second story I'll relate is also from The Economist. There's been a farm somewhere in England that has been continuously in operation for, I'm going to say, 140 years, where they experiment with different kinds of farming techniques. And I don't really understand, having no sense of farming whatsoever, probably wouldn't know one end of a spade from the other. They talk about this farm is divided into 3 areas. One which is very, very well irrigated, right fertilizers, right soil treatments. And the other, one of the areas is farmed as if it's what you would call a mid-level or developing country farming technique. And the third part of the farm is farmed as if it was being farmed in Africa, okay, under the techniques that are used there. The actual grain, this is all on the same farm, and it's the same land, and it's the same climate. The actual returns, the crop returns on the most efficient part of the land are 10 times as high as they are on the part of the farm that's farmed in the same way that farming is still currently done in Africa, in most parts of Africa. So we still have a lot of potential from simply a technological perspective, from a farming perspective, in terms of things that we can choose to do. So I think a lot of the issues that we're dealing with here are political issues, that they're not actually a resource, running out of a resource issue, as a lot of people might have you think.